so many other investment banks and banks really got, quite frankly, caught up in the housing bubble. But like every bubble, the bubble ended, and now we're seeing the downside of that bubble.
Following the same risky practices that sunk former giants Fannie Mae and Freddie Mac, Lehman also had a hand in securing America's high-risk subprime mortgages, believing that the popularity and sheer volume of those loans would net huge gains. But it didn't.
You can bet the Fed would have gone into an emergency meeting, because that would have meant that the stock market itself would have gone into what's called a circuit breaker. This will blow. It's just a question of which one of these entities blows first, and then that'll set forth a panic, in my humble opinion, that this will end up being worse than the Great Depression.
It's over as hell is coming for the economy. And welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. Now, the data is in, and today we're going to talk about the multiple systemic failures that are happening around the economy. We're going to talk about how the school districts are bankrupt, how pensions are wiped out, the fraud, the corruption, all of those things, guys. And then we're also going to talk about when we expect everything to collapse. And the important thing is what you can do as a consumer citizen to find a solution and to protect you and your family. And I have a guest star, you guys. I have the community hero, the community expert, Mitch Vexler. Mitch, how's that petition coming?
The answer to the question on the petition is that we've had roughly 238 signatures in the last couple of days. And I just wanted to take a minute to thank everybody who has signed up, because it's crucially important in that we intend to use that petition to show the judges that real people are affected by this problem. And it's just as crucially important to forward the videos to your friends and family and anybody who has an interest in this, so that they can understand how they're getting hurt. And again, that goes right back to the petitions. So thank you. It's important. With regard to your next question, yes, in my humble opinion, hell is coming for the economy. And I put together a list of a cumulative effect of different items that we can review this morning and have a discussion about.
We're going to do the best we can to get through a laundry list of issues systemically and problems. So we're going to try to keep this under 40 minutes, right, Mitch?
You're leading, boss.
Okay. Like I said, we're going to try. Now, where I want to start is, and I'm going to get to unfunded liabilities here in a minute, which is 1.3 trillion as of 2023. I want to get there, but I want to start by talking about how the schools, Mitch, are already bankrupt. Can you explain to the viewers why the schools right now, not all of them, but a lot of them are bankrupt?
As we have discovered through the DCAD situation, and now multiple attorneys across the United States reaching out to us, that issue with the school districts is rampant, in that the school districts are in fact a taxing entity. They own the CADs. So the school districts, the municipalities, as a taxing entity, they own and control the CADs. Well, the money from the CADs gets divvied up to the school districts. And as you heard in the video yesterday with Jeff Marshburn, the reality is that the school districts have taken it upon themselves to take unilateral bets with the taxpayers' money on basically something that does not yield an economic return. So not only is that a huge issue in and of itself, but when they go out and they raise bonds for driveways, sidewalks, roofs, buildings, stadiums, those bonds have a minimal chance of getting principal repaid, because remember, the principal has to come back and the interest on those bonds and or mortgages has to come back. You can study an amortization schedule. What you'll see as we go through this list this morning is that every one of these individual line items has a cumulative effect, meaning they all add one upon the other upon the other. So it's not just the debt loads, but it's the debt plus the interest payments. And that's what we're going to discuss this morning.
Yeah, and I want to go right in now to the pensions being wiped out. And for the viewers, this is crazy, and I'm about to show you, and you're about to learn right now if you don't already know. But the pensions are known as unfunded, because they're not paid for yet, unfunded liabilities. And real quick, Mitch, let me show the viewers what I found, because Mitch helped me understand what was going on. This is an article from Reason Foundation. This is suggesting as a forecast that state pension debt totals $1.3 trillion at the end of 2023. Personally, Mitch, I didn't know how bad it was. I assumed that everything was fine and I didn't have to look under the hood, and I was surely mistaken. And thank you for helping me wake up to that I can't trust the math because there is no math. But this is newly released forecasting by the Pension Integrity Project, which is essentially indicating that state pension systems will likely remain at historically high debt levels. And when we throw up this chart right here, this is absolutely insane. This is United States. This is unfunded liability, and it's getting way worse. This is so crazy. And you can tell this is all of the states right here. You see which states have the biggest, well, I was going to say fraud, but let's just say mismanagement of the funds. I mean, look at Alabama, Mississippi, South Carolina, Illinois, Kentucky, New Jersey, and then in yellow, Texas, Louisiana, Colorado, New Mexico. I mean, holy smokes, Mitch. It seems like unfunded liabilities alone can crash the economy. Do you expect that some type of stimulus will be created, like some type of teacher or school bailout? So can you tell us whether or not you think that's coming? And then can you explain just how bad unfunded liabilities are?
Okay, so let's start with the second one. The unfunded liabilities are absolutely the tip. So in other words, it's the CADs that are creating the fraud. The liabilities are, in fact, government overreach and or government overspending. You cannot pay back the debt on either one for a very simple reason. As you've seen in the DCAD situation, and those numbers replicate themselves, the only thing that's different is the denominator between one county and the next. And the denominator is, in fact, the median household income. In the case of Denton County, if you have $109,000 in median household income, well, there is no money off that median household income, and we know that because 37% of the households, be it multifamily households and or single family households, cannot afford the roof over their head and or will go bankrupt, meaning the combination of just that 37% of the households alone is clear, irrefutable evidence that these unfunded pension liabilities cannot be paid. It's two different issues. An unfunded liability on one hand created by the governments in terms of the pensions, that's one issue. The other issue under the hood is, in fact, the 37% of the population, meaning of the household population, meaning there is no revenue to pay down just that single item of the unfunded pension liability. There are dozens of these problems. So as I said at the beginning of this video, it's the cumulative effect. When you take one unfunded liability and then you add the fact that they're ignoring multiple laws, then you add in the interest rates that are bopping up and down at the whim of the Fed, who's purely reactionary. When you start adding all this up, the key word is cumulative effect. They cannot be repaid.
Let's go a little bit further down this rabbit hole. Let's talk about fraud, which is another name for illusion of legitimacy, I think. And by the way, you coined that. So let's talk about some illusions of legitimacy and the fraud and how they're gambling with our money. Let's talk about how the stock market is an illusion of legitimacy. The low unemployment rate is illusion of legitimacy. The reverse repo market, illusion of legitimacy. But before I do that, can you explain to the viewers this right here, Mitch, which is it's kind of hard to see, but this is your present to me as you titled in your email. And can you explain how the CADs are making more money than Apple? A lot more. I mean, can you explain what I'm looking at here, brother?
Yeah, so if you can blow that up, because it's a little bit hard to see, but the reality is that Apple generates 1.24 million roughly per employee, and DCAD costs the taxpayers roughly 135 million per employee. One is making money, the other is stealing money. So what I'm showing you there is the efficiency of the theft. The efficiency of the theft by DCAD is 678 times greater than that of the revenue of Apple, which is by any definition the most efficient corporation on the planet.
Well, it's not the most efficient process, though, because it appears that fraud is the most efficient process. Sadly for them, though, Mitch, it's against the law. And I don't believe there's a statute of limitations on fraud until it's discovered, if I'm not mistaken. So have fun with your fraud, guys. If you're committing it, there's no statute of limitations. They will find out and they will smash you eventually. I'm just going to move on. Let's go into illusion of legitimacy, starting with the Central Appraisal District value fraud. Mitch, I want you to, we've explained to the viewers multiple times now how they're generating assessment value and taxing us on our properties without the math, without following the law, which is the USPAP, which is Uniform Standard Professional Appraisal Practices. So they're not doing that, but I want you to cover that CAD value fraud, how that systemically hurts the economy. And can you go into the 2301E and maybe even a 313 agreement?
Okay, so the 2301B and 2301E are clear violations of the Texas Property Tax Code, and they're required under the Texas Property Tax Code. And they are completely ignored and violated by the CAD against the vast majority of homeowners and commercial property owners. And that's extraordinarily easy to prove. I even sent you one this morning on a home here where its value went up 61% between 2023 and 2024. Yet there is no math, there is no clear and convincing evidence, which is required to justify a 61% increase in a home value anywhere. It's not in their computer systems. In other words, what they did is they simply overwrote the computer system by hand. And we have the evidence of that from Mr. Spencer, the chief appraiser's own testimony, where they took 60,000 properties outside of the database, manipulated them and put them back. They were manipulated in Excel and put them back. So the proof is that they are simply making it up. They're guessing. Over and above that, we have testimony from Charles Stafford telling Mr. Spencer himself in a meeting, a public meeting under threat of perjury, Mr. Spencer, you and your team are the masters at guessing. Well, okay, if they're the masters at guessing, they're hand over writing and it's their own testimony, how exactly could those statements not be true when they're done under threat of perjury? Ergo, that's how the fraud is being committed.
I mean, I guess they didn't guess that they were committing fraud, so I guess they're not masters at guessers. And Mitch, here's what's interesting. Mitch and I don't know, we were up late last night. Mitch sent me an appraisal workup from, I think it was the Fort Bend Appraisal District. We had a user reach out to us and we're reading this. And after an hour of Mitch and I reading this ridiculous report, we finally were able to eliminate page 3 of this report. So it took us an hour. And by the way, you guys only have 15 minutes in front of an ARB. And it took Mitch and I together with our experience an hour to figure out the game that they play. And so the thing is during this exercise, I, just because it was late and I don't know why we were working so late, but I did a calculation because we noticed that the comparables square footage were off compared to what they sold for on MLS. So the county assessor is saying these houses are bigger than they are listed for on MLS. So either MLS is wrong or the CAD is wrong. And honestly, guys, there's a new FHA guideline that says appraisers must remeasure because CAD is always confusing the size of houses. In other words, it's too big. And so I did an exercise on if those 60,000 comps that were taken out of the system, if there was only a variance of only 4 square feet, so they were 4 square feet bigger, just 4, no one's going to pay attention to 4 square feet, that can yield up to $700,000 in net revenue. Just 4 square feet variance. So it's a huge deal. Now, Mitch, can you explain how the school districts are also gambling with pensions, gambling with bonds, and basically exposing them to really bad business? And can you explain that in the sense of on those 313 agreements, the solar farms, how the solar farms and things like that are absolutely ravaging the school districts right now?
With regard to that issue in the solar farms, in my humble opinion, for what it's worth, the FBI should pick up a field office and drop it dead smack in the middle of that community and start arresting people. Because the idea that a school district is actually spending taxpayer money without any guarantee or any nexus to return that money and act as the go-between for a developer of those solar fields is just off the charts criminal. It's just something that shouldn't happen. They don't have the authority to make it happen. The school district obviously has never been challenged on this point, but nonetheless, the members of the boards of those school districts did sign an oath, and that oath in the state of Texas is to protect the Constitution of the state of Texas and that of the United States of America. Well, if you're not protecting the taxpayers' rights and you're taking unilateral bets without any guarantee or a modicum of a statement of return of interest and profit, that's a violation of both constitutions.
Mitch, can you talk to the viewers about, because we're on the illusion of legitimacy. Can you talk about how the stock market euphoria is actually an illusion of legitimacy? And, that sucker can crash. Can you talk about the stock market and your expertise there?
Yeah, it's a big topic, but the issue that you're seeing and what has happened in the last 2 weeks, especially what happened this week on Monday, is in reality a ramification of what has happened during COVID when the government chose to pump in, give or take, in the last 4 years, around $20 trillion in order to help offset some of these damages from COVID. So again, the key word is cumulative. Well, that money's got to go somewhere. That money's sloshing around, and that drives the values up. And then the cumulative effect, an add-on effect of the Federal Reserve monkeying, you can go back 16 years, 20 years, it doesn't matter. The Federal Reserve, as I said yesterday, in reality is nothing more than a reactionary device designed to cover off the banks. The Federal Reserve exists to benefit the banks, not the population. So the cumulative effect of all these things that we're talking about are items that cannot be paid back. And eventually there will be a default. And that's why when we say hell is coming, when that default occurs, nobody knows what that economic damage will be, but the good faith of the US government will be shot. The US government more than likely will default. And you could say, well, we'll just keep printing money till the cows come home. Yeah. Have you ever heard of the Weimar Republic? How well did that work when it took a wheelbarrow of cash to go buy a loaf of bread? The answer is it didn't. And that's what happens, the cumulative effect. These things are really, really bad. And that's why they're getting these videos to the politicians, getting the videos out to the public to help people prepare. And it's not that we're doomsdayers, right? But the reality of it is the math doesn't work. So something has to give. This will break. It's just a question of how do you help control the damage?
Well, I mean, the other thing, Mitch, is the reality is you and I are both bullish. From what I know about you, we do not like the situation. I want to go sell houses, brother. I want to go find my primary residence. I'm choosing not to because just like what you just said, the simple elementary school math is just not there. And in fact, you're a developer builder. Can you explain to the viewers why you're not building anymore?
Well, for the same reason, I don't trust what I see. And I'm able to quantify, and that's what we've done on our website at mockingbirdproperties.com/DCAT. There is a mountain of quantified evidence. So everything that's coming out of my mouth is literally backed up on that website. And when you have that amount of evidence, the only thing I can say is, look, I'm a builder and we are extraordinarily good at what we do. But if I don't trust what's going on under the hood, why would I put my company in harm's way of something that I can't, I literally can't justify what I'm seeing. And as a builder, we're only as good as our tenants can pay rent. If my tenants can't afford the rent, I'm doomed. And what we saw coming a year and a half ago is basically, even though you and I didn't know each other at that time, but what we've accomplished in the last week is outlining these problems. And the way that I look at it, the problem that we have, I can't justify moving forward on new construction because I know, because we've quantified it. If I spend $300,000 on a unit to build it, a multifamily unit, that means that my tenants have to pay $3,000 a month. What are the probabilities of my tenants, 100% of them, so it's 100% and 95% of the occupancy, being able to afford $3,000 a month? Well, the answer is about 30%, meaning if I went to construction today, I would literally be one of those others who are building a building on 70% credit risk. I
Yeah.
couldn't go to my investors and do that. I wouldn't do it for myself. I wouldn't ask anybody to put their money in. So the net result of this is, and the reason why I'm sounding these alarms and asking people to forward these videos, you're putting yourself in harm's way if you don't understand what's going on around you. And the reality is these bureaucrats who know nothing about what they're preaching and keep nibbling at the edge to try and fix a problem are in truth interfering with my ability to make a living. Well, if they're interfering with my ability and I know what's going on, what are they doing to everybody else?
Oh man. We see what they're doing, and to outline some of these problems, and you know, let's talk about, one of the big problems, Mitch, is, and this is because I asked myself, like, why is this so hard for people to see? It's the inflation. The inflation itself is an illusion of legitimacy. And so can you kind of explain how, Monday we had a crash kind of happening. It appeared to be reversed. Can you explain how the liquidity in our economy is actually drying up, and we can see that actually in the reverse repo market? Can you explain the reverse repo market and the fact that it's finally starting to drain again?
Okay, two different issues. So the lack of liquidity that occurred on Monday morning pre-market was absolutely horrific for anybody who was using options, because the volatility went from roughly 19 to 52 overnight. And had the market crashed below that double bottom that we spoke about, you can bet the Fed would have gone into an emergency meeting, because that would have meant that the stock market itself would have gone into what's called a circuit breaker, which is a hard stop. And I think it's down 7% roughly. Now, that didn't occur. However, the shake of the lack of liquidity and the VIX, which is the volatility index, going from 19 to 52 caused a massive amount of damage, to the point where, why did Bitcoin drop so much? Why did silver drop so much? Well, there's something that's called clustering. And when blank hits the fan, for lack of a better word, the clustering effect kicks in. Well, in the case of Bitcoin, in the case of silver, those are the same as cash. So when the margin notices occur because the VIX spiked, people needed cash. Well, where do they get the cash? It's easy. They sold their Bitcoin and they sold their silver, and they did it in bulk, and that drove those markets down. That's a buying opportunity in both. However, we're not giving financial advice, but if somebody is a trader, they would recognize what was going on if they were a good trader and take action accordingly. It's kind of a gift. And the same thing happened. So if you look at Monday afternoon, when the market started to calm down, that when we mentioned that double bottom, if somebody was a skilled trader, they literally could have gone into the market at that point and sold positions. So they could have bought a put spread and sold two puts below it. They could have done all sorts of things. And right now, as of this morning, they would be up massively. So people freaked out because it was a hard hit on the volatility, not necessarily a hard hit in terms of the numbers. For the market to be down 4%, given where it was, close to its all-time high, is not horrific. But a spike in the volatility, which is what we study, right? We use volatility of everything. We use standard deviation when we're under construction. We're looking for problems. So we use standard deviation, then we use Monte Carlo analysis to judge that volatility and play what-if games. And even for myself, for the last 5 years, I've had a nagging question of what would happen. And we modeled volatility. But it's hard to model volatility when it jumps 300 or 400% in a matter of hours, because the liquidity is simply gone. And that's what happened to everybody.
Can you talk about the volatility now in the labor market, and how 4.3% unemployment rate is, in addition to what we mentioned, an illusion of legitimacy, and how when we look under the hood of the labor market, what do you see? What do you see? What does Mitch Wexler see past the headlines in relation to unemployment in the labor market?
We track the employment for obvious reasons. Like I said, I'm a monkey in the middle, right? I'm only as good as my tenants can afford to pay rent. So we track it very seriously, because that tells us if we were going to build, what we would be looking at in actual occupancy. The reality is that any division of the government that isn't telling the truth or cooking the books, that's a clear indication that that division of the government needs to be shut down in its entirety. And what you have with the Bureau of Labor Statistics and these numbers, while we're tracking employment, it's 4.3% unemployment. Yeah, no, it's not even close, because it doesn't track certain components. How many people have 2 jobs? How many people have 3 jobs? How long have they been in the country? Are they illegal immigrants? Blah, blah, blah. So when you add all these things up, you're right back to a cumulative problem. Well, we're tracking 10.8% at a minimum, right? We're giving the benefit of the doubt to the government at that 10.8%. All you got to do is add 20 million people to the unemployment rolls and figure out, okay, they're lying. Ergo, they've cooked the books, the statements, and then they turn around. So you watch, and 90 days from now, they'll come up with a revised report. Yeah, it wasn't really 4.3%. It's really 5.2%. It's a continuous lie. It just simply isn't true, because they move the goalposts. They don't want to tell the truth. They just simply say, well, we'll just move the goalposts in order to create the narrative. And then they pump the narrative in the market, and anybody with a brain cell can see right through this.
You know, Mitch, I look at you as an expert in commercial real estate, not only just purchasing and analyzing commercial real estate, but also the development and the conversion of it, meaning you have that skill, you have the experience. And because of that experience, I would like, if possible, for you to go into the commercial real estate meltdown. I believe we have a few black swans. Everyone's talking about the black swan. Well, first of all, it's a black swan. You don't see it coming. So it's kind of like, whatever. But I've been asking myself, like, what is going to set this all in motion? Minus the fraud, corruption, and the Fed, right? Like, we already know that's there. I look at the commercial real estate meltdown as what is going to really trigger the recession, because of the massive losses. The fact that if the banks foreclose, they go bankrupt. If the bank forecloses on some of these commercial properties, they go bankrupt. That's so hard for me to fathom that more of that is not being released to mainstream media. It doesn't appear it's being taken into consideration for a recession. I mean, there's almost no one talking about recession in commercial real estate. Mitch, can you go into the commercial real estate meltdown, the fact that the true value for some of these is actually just land minus demo, and how they're hiding risks, because you analyze risk for commercial real estate, and how this might impact the regional banks, which could lead to recession? Well, I know you already think we're in recession, but can you explain a little bit of this?
Sure. Okay. So I mentioned that there was an office building in downtown Denver, 387,000 feet. That's the prime example where it's a drop dead gorgeous building. It resembles the Bass buildings in downtown Fort Worth. I mean, this is nice product. The problem is it's 30% occupied. And when you put a pro forma to it, which we did, we took it out 10 years. And the reality was that property would not generate 10 cents in profit following 10 years of effort. So then we looked at saying, okay, fine, on an adaptive reuse, which is what we would do and convert it to multifamily, because the floor plates are large, it makes it difficult. So what we said, fine, we'll notch a C-section out of the middle of those buildings such that the fire marshal laws and everything else would conform to the buildings. We'd be able to get the windows to open, et cetera, et cetera. So we ran that math. That was about $500 a foot. Okay, that did not work. So what you end up with in reality are buildings that are functionally obsolescent. They no longer have a purpose. So then the question becomes, what are they worth? Well, they're worth land minus demolition, assuming you can put something back on that land. And that is a big assumption, because what you would end up putting back would be considerably less in size, unless you're prepared to sit on it and hold it for the future. But the bottom line is, it's a giant vortex straight into the earth, because you can't get anything to work economically. If you simply say, okay, fine, land minus demolition, we'll pull the trigger, okay, you still have millions spent in demolition. And therefore, if you bought it and said, okay, I'm just going to buy it for $1 and tear it down, that's millions of dollars of sunk cost for an undetermined amount of time of investment on the hope that something will be useful on that land somewhere in the future. And therein lies the problem. The banks are sitting on thousands of these assets. Hilton, Times Square being torn down. Sheraton, Times Square being torn down. Why? Because the land below the buildings on 4-star hotels is worth more than the revenue stream that those hotels could ever generate, and they're now functionally obsolescent. So the banks refusing, and we have actual knowledge, firsthand knowledge of this, because we've been asked to help a couple companies out. One of them we could not help out because of what had happened from the GC committing fraud, stealing money, et cetera. But that bank, for almost 2 years now, has refused to foreclose. Now, I want to point out that that bank is what I would call a small middleman bank. So what they did is they went out to a bigger bank and they borrowed the money. Then they loaned that money to the developer and they charged a fee in between. So let's think about this for a second. So they borrow money at 5%, they pump it out at 8%. So they pick up 300 basis points spread of interest. The equity is going to lose $18 million, maybe $18.5 million from front to back. It's going to get wiped out. Here's the problem for the bank, for the middleman bank. The interest rate that they were getting on their money, they're not going to collect because this entity is bankrupt, right? There's no place to go to get the money. Now, who's going to offset the principal of the several $1 million that they put into that property? And if you think that bank has got $7 million in cash on hand, this middleman bank, you would be wrong.
Doesn't sound like there's going to be good things to come for the banks, which is, I mean, it's not hard to see that, so people shouldn't be surprised. But let's move on. You know, we've explained to the viewers the massive fraud, corruption, the overvaluation, schools are bankrupt, pensions are wiped out, commercial real estate meltdown, unaffordability, the consumer literally suffering on every single turn. But Mitch, let me ask you, man, when does this collapse? And also, can you help me understand, because I've been listening to a lot of these politicians back in 2005 to 2009. Do you think that they just punted the depression of 2008? It's almost, all the politicians will come on the video and say, if we didn't do this, we would have went into a depression in 2008. Do you think that they just, again, did they just punt that? When does this collapse? Has it already?
No, you go broke slowly and then you go bankrupt with a big boom. And the big boom will come when a massive default at a government level occurs. Now, you saw that default occur in Detroit because Detroit filed bankruptcy. Chicago is bankrupt. By any definition, they don't have enough money to cover off their unfunded liabilities. That's clear. And so everything is nothing more than punt it down the road with this magic money theory, which is we'll just keep printing money till the cows come home. But the problem, as I said, you end up in the Weimar Republic if they can keep it going that long. I don't believe they can. The tipping point will occur when one of these government entities, it could be a municipal bond, it could be an unfunded liability on a pension. In other words, the pension itself goes bankrupt quickly. You don't know where that tipping point is coming. But when you add up all these items that we're talking about, there simply is no math. There's no money to pay for this. So sticking your head in the sand, politicians, and thinking, well, we'll just punt, isn't going to get the job done. So if you go back to 2008 and 2009, your question was, did they punt at that time? Absolutely, because the credit default swaps that they shoved down the toilet of Deutsche Bank in reality still exist. So all they've done in this time is pump the problem up because they've kept creating the debt with no mechanism to pay it off. And therefore, as I keep saying, this will blow. It's just a question of which one of these entities blows first, and then that'll set forth a panic, in my humble opinion, that this will end up being worse than the Great Depression. You have to get rid of this debt in order to start over. And like you said, yes, I'm bullish, right? I just don't like my way of making a living being interfered with by somebody who literally can't add 1 and 1.
Why don't we just call ourselves bullish but not stupid?
Yeah, there you go. There you go.
So we're actually, I have a bear right there just to troll the bulls. But it's just like, you can be bullish, but use the math. If you're going to be bullish and not use math and use your emotions, I'm not going to listen. But let's move on to our last segment right here. And I want to get your update on how the lawsuit's going and how the petition's going. But first, for the viewers, how can the fraud, the corruption, the greed be stopped? Do we need to go into a depression? Do we need enforcement to step up the prosecution? How can we fix the math? Do we run for office? Do we sign your petition? How do we make this stop?
Okay, so when economic problems occur, you want to circle the wagons, which is an interesting statement. Circling the wagons in this case means the input of everybody that's watching these videos and everybody that's signing the petition. The reality is you cannot fix a problem that does not want to be fixed. The taxpayers need it to be fixed because the circling the wagon means making sure that your own household is prepared to weather a storm. When you do not own the real estate that your house is sitting on because you are paying a tax based on a subjective value, not an objective value. USPAP, Uniform Standards of Professional Appraisal Practice, is a fine document, and it is about being objective to value. The problem is the CADs don't give a damn. They do not adhere to the law. They do not adhere to USPAP. Therefore, the solution to circling the wagons on your own house is, in fact, the elimination of the property tax in its entirety, because you cannot allow the subjective nature of what these people have done. These are pure, straight up criminal activities because they completely ignore state law and federal law and USPAP, which they state, well, we adhere to USPAP. Well, if that statement is true, then how in the world do I have that mountain of evidence sitting on our website? The elimination of the property taxes is the only viable solution to shore up the value of everybody. Now, there's commercial property owners and the single family property owners. But in order to accomplish that, those owners, and even the people who are paying rent, because they're paying the taxes too, everybody's got to step to the plate. You can't sit back and just say, oh, woe is me. We're giving you the tools. We're not charging for this. This is all free. Everything you're doing on this website is free. So people don't have an excuse. We need you to get involved here because it's to your benefit.
Yeah, we got to stop the taxpayers from being passive. We have to understand that there are powers in numbers, and the really only way that we get this stopped is in those numbers, filing lawsuits, not being passive. Mitch, can you quickly give us a breakdown of the progress that you've made through your lawsuit and petition?
Sure. We're at the appellate division right now in Fort Worth. If I'm not mistaken, the brief will actually be entered, if not tomorrow, which is Friday, on Monday. So they're getting ready to put that brief forward. We'll win. It'll get punted back to the original court. And at that point, we'll be able to present our evidence in front of that judge. And assuming that judge is honorable and we'll take it forward, that's all good. We just need to be able to present this evidence. And that's all this is really about. And that is why that petition is so important, because we intend to show the judge these are real people that are being affected by this. And you, Your Honor, should be paying real close attention because we're not going to stop. I honestly believe this is headed for the Supreme Court of the United States.
And Mitch, it's not just the petitions. You've had attorneys and homeowners from other states around the nation, and I believe even Canada, if I'm not mistaken, reach out to you. Is that correct?
Yes, Ontario, Canada, Los Angeles, Chicago, multiple attorneys recently, as in the last 3 days out of Chicago, Florida, all throughout Texas. There's a lot of problems, and that ramification across the U.S., again, is why it doesn't matter where you're coming from, just sign that petition. If you understand what's going on here and we're able to reach you, that petition is really, really important, as are these videos, because your friends and family need to understand what's going on. And they should be jumping up and down saying, no, we have every right to own our home. And in truth, look, the War of 1812 was fought over this exact issue. The United States became the United States because it had to separate from Britain, because Britain insisted on charging a tax where no value was being added.
I mean, look at us now. I mean, it's just like you said, it's just the passiveness. Anyways, Mitch, I'm going to get us out of here. I think we got under 40 minutes. I'm not sure. This says over 40 minutes, so hopefully the editing will be okay. But one more thing to the viewers, give a hand of applause for Mitch, our community expert, real estate mindset expert, and do us a favor, just take 10 seconds of your time and sign the petition. The petition is linked in the description below. And other than that, guys, I hope you found overwhelming value in this video. We hope you're cautioned. Just be careful with your money. Just please don't get trapped in the rat race. And other than that, if you're out there investing in real estate, we wish you luck and we hope you win.